retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Do you have over $10,000 in credit card debt? If you're feeling the financial impact with unprecedented economic challenges, DebtBlue is here for you. With DebtBlue's Success Guarantee, you pay nothing unless your debt is reduced or completely resolved.
I'm just living sky high right now. I'm very thankful for it, and the team at DebtBlue are phenomenal. They're able to work with you. They're great.
Call for your free debt resolution information now. 800-200-6895. 800-200.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled The Complexities of Inherited IRAs. Mike, a lot of this complexity started at the end of 2019. What are we seeing now in terms of how inherited IRAs are treated today versus how they were treated before?
The biggest change is for people other than a spouse, and I'm going to overly generalize here, but as a rule of thumb, if you are inheriting a retirement account from someone other than your spouse, most likely you are going to need to empty that account within a 10-year time period and probably take a required minimum amount every single year, although the IRS has been willing to waive that since the rules were changed.
Now, as you mentioned, they've waived that each of the last 4 years, but there's no guarantee that they will in the future. Is it worthwhile for investors to talk with their tax professional and advisor to figure out what the best plan is to minimize taxation over that 10-year period anyways?
I mean, even if they don't waive the penalty, even if you do have to take a minimum amount, you should be planning this, right? Because if you just wait, then you might end up being surprised at the end of year 10 when all of a sudden I've got this massive account to withdraw and I have a whole bunch of taxation to realize, and it starts impacting everything from my Medicare premiums to my capital gains rates to everything under the sun.
The guide this month is titled The Complexities of Inherited IRAs, and there are 2 ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001. Or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Wednesday edition of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silva here with you as we take a look at markets in the early going, relatively mixed in what is a relatively quiet week in terms of economic data. However, we will have the presidential debates going on Thursday of this week. And
what's going to matter, do you think, to the markets?
Marc and I were just debating off air whether or not there would be any impact from the debates, and I was staunchly in the camp that we won't see any real market volatility.
How can you say that?
Okay.
You're a sane, sober. Yeah. I'm out of here.
I was going to say the same thing. You're a sane, sober person. I think you're too deep into the weeds.
Can't debates change election outcomes? 1960, 1980, 2000 probably. When Bush gave Gore the nod, when Gore got uncomfortably close, more recently.
You honestly think any single person's going to listen to that debate and change their view on who they're going to vote for?
I'll say again, 1960.
I don't
Nixon
think so.
won on substance. Kennedy won on the telegenic effect. 1980, Reagan disarmed people. They thought he was a nut job cowboy. He proved that he was level-headed and could laugh off criticism. 2000, George Bush proved he could hold the stage with Al Gore. Those are three examples. I'm probably missing some others. Maybe 1988, when Dukakis looked to be a lot shorter than Bush, even though that wasn't entirely fair, but it got made fun of. It was a meme, as we'd say today, and took off. So if debates can change election outcomes, why shouldn't they matter to markets' perceptions of what policies will be?
Has there been historical examples of it changing impacts?
I'd have
of the
to go
election?
back and look
yes,
at
I'm sure
dates.
You've mentioned examples of it in the 200+ year history of whatever. How many? Yeah, I'm sure it's happened.
I started in 1960. Okay,
it's definitely happened. But this election and these two candidates, I'm in the camp, and everyone's entitled to their own opinion, which is the great thing about this country, that there will be...
We're not debating the First Amendment here, Paul. I just want to hear what you think.
There will be no impact to markets on Friday. We will not see...
What do you mean by no impact? What if stocks moved by 0.5%? You wouldn't be inclined to attribute it to the...
No.
What you're saying is there's no...
Not enhanced volatility.
Okay.
There will not be enhanced volatility from the impacts of these debates that will go on
What
Thursday.
if one candidate is widely agreed upon to be the winner? Well, yeah. And we know what the expectations are. If Biden shows up awake and coherent and conscious, he wins. If Trump is even modestly disciplined and doesn't say anything wildly nuts, he wins. But what if there's widespread consensus that one or the other wins and then markets move bigly, as one of the two candidates might say the following day? Might you attribute it in part to, say, optimism about Trump tax cuts? A lot of investment managers are crazy optimistic about Trump tax cuts. They love and more deregulation. Others think he's a threat to the Fed and other institutions. But
which tax cuts? Them being reinstituted, the tax
extending the 2017.
It's been mentioned that Biden would like to keep those in place as well, and rather go more punitive measures on the higher income tax earners. So, however you slice it from a policy standpoint, from fiscal discipline, neither really adhere to much of that at all. We've talked about this on the show
they'll
before.
both run big deficits.
Exactly. So to me, there's not a substantial change there.
But business people, generally, they may not be voting for Trump because they don't like his abrasive personality and his abysmal grasp of U.S. history. Not something we'll get into on this program. But they love the corporate tax cut reduction or the extension of the current rate, whereas Biden would raise it. They love his deregulation agenda. They loved it last time. They like it again. So there's an argument to be made that he might be better for business optimism.
To be clear, and now we're kind of more evolving to the question: does the election going to have an impact? And I do feel as if the election is going to have an impact in November. Don't get me wrong; I will subscribe to the theory that there will be some volatility, perhaps heading into the fall. I just don't feel that the debate and whatever happens on Thursday will have any significant impact. We will see on Friday morning. I believe I'm hosting on
you hope it
Monday.
does, though, right? I'd love to see a surprise of some type and everything to reflect that surprise. I'd love to see markets moved one way or the other. That would be interesting. It would be exciting.
Friday was an inflation reading, though, right?
Core PCE, which is largely sort of a more telegraphed number, I would say. Or
you think so?
It lends to less surprises. I would say it lends to less surprises than some of the other reports that come out. But
yeah, it's kind of an afterthought, which is weird.
Right, even though it's
because CPI is the most widely followed. We got that already. Yeah, it does tend to get lost in the data. Plus, it's the end of the month. It's timing thing too.
It does dovetail into our other conversation here just regarding the Federal Reserve governors are out speaking this week, and each of them, Chuck did a good job of laying this out in a prior conversation that he and I had on this subject, that each particular Fed governor seems to have their own sort of role in terms of the type of rhetoric that they will usually come out with. And it just seems like this week that we're parsing through different speeches from different Fed members, all saying sort of slightly different variations, where just yesterday Mary Daly came out and said that she was concerned that the labor market presented a risk and that unemployment had ticked up, and that we could perhaps see the labor market slowing, and that's something to monitor going forward. I don't disagree with her, but that's just what she came out and said. Then you have Governor Michelle Bowman coming out yesterday saying that she sees several upside risks to the inflation outlook, and kind of reiterated that we would perhaps need to keep borrowing costs elevated for a longer period of time. So it seems like each one's sort of playing different notes that they have, or different sort of parts of speech that they want to get out there. To me, there's not a whole lot that I take from it, unless you disagree.
It would be wonderful if they could agree on a framework for the inflation process. If they could say, we believe as a group that inflation is driven by expectations, by underlying demand, cyclical factors, that is, which we use the unemployment rate as a proxy for. There are others you can use. And then finally, shocks, which are unpredictable, oil or food price shocks, and those are bad. A productivity shock could be a good thing. It would be nice if they all started with the same framework. It'd be like going to two different mechanics, and one of them practices, one of them believes in physics as we understand it, and the other one believes in some mystical theory about how cars work, something bizarre and spiritual. I don't know. Sometimes what I'm saying is, that's not the best analogy in the world. I'll work on that. What I'm saying is that they're not always, never mind on the same page in terms of policy. They may be thinking in terms of different models or frameworks, a totally different view of how things work. And that's not helpful, because their job is to set inflation expectations, to change the way we all think. And hearing contradictory opinions from academics using different models does not lend itself to coherence.
But is there one, and you know the modeling way better than I do, is there one preferred approach?
It's the framework that I just articulated. That's what you'll find in college and graduate textbooks.
Is the best approach to go at it.
It's called the Phillips curve approach, named after the guy that first noticed that there's this connection between at the time he used wage growth and inflation, but you could put unemployment in there as well, as I mentioned. Yeah, that's the standard framework that you're taught in college or at the graduate level, a Phillips curve type framework. They are thinking that way. Most of them are graduate school trained economists, not all of them. And even if they're not, they're still thinking in those terms because their staff's trained that way. It would just be helpful for them to articulate what they think drives inflation and then explain what's bugging them about, like what's bugging Bowman. She says, it's potentially supply shocks. I don't know. Some component of that process, but just coherence so that we all understand why two people can differ and whether or not those differences are a big deal.
We'll see as more speakers come out. Like Tucker mentioned, we will get the core PCE reading on the inflation front on Friday here, so we'll see if there's any follow-up commentary from that later this week. Taking a look at markets in relatively mixed territory throughout the first half hour plus of trading or so. We're going to take a quick break here on the Financial Exchange. When we come back, we're going to be talking about the U.S. auto market. Auto sales are much slower than anticipated. We're going to talk about that right after this break.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
U.S. auto sales are expected to slow during the second half of 2024. Cox Automotive is now anticipating that 15.7 million cars will be sold throughout the end of 2024 for the calendar year. That represents a 1.3 increase from where they were in 2023. Just to step back for a moment, 2022 was the worst year in auto vehicle sales in about a decade, where only 13.7 million cars were sold in the United States. That locks in very well with sort of the peak of inflation in terms of what we were seeing back in 2022. And that was an 8% drop from the year prior. The years in the pandemic were really strong years in terms of auto sales. But this year, looking to be a little bit more moderate in terms of the amount of sales that we're seeing for U.S. vehicles out there. In terms of the winners in the space in the U.S. auto market, GM, Toyota, and Honda are the ones that are been the most successful this year, while Stellantis and Tesla have seen a drop of about 15% in their sales year to date. It was an interesting piece, Mark. I was talking with one of our affiliates this morning. Toyota is a company that has been hesitant to really invest significantly in the EV market. They have poured more of their resources into the hybrid space. So it's just been interesting to see how all of these companies have positioned themselves. But overall, it seems like GM and Toyota are the ones that are faring relatively well in the auto space at the moment.
Yeah, inventories have been building. I'm looking at overall inventories. This data comes from the Fed, so it's at our fingertips here. Inventories have been building for about a year. Sales, as you said, troughed in, and I'm looking at the seasonally adjusted annual rate. Again, the Federal Reserve reports this. Troughed it, I'm going to round down and call it 13. Spiked in the past 18 months roughly to about 16. So growth has been breakneck. Revenue growth at the two of the big three, I didn't look at Stellantis, I'll talk about GM and Ford, has also been sort of off the charts. And I guess what really matters is earnings and earnings per share. And do they have room to cost cut with recently inked labor contracts? I think they both re-signed, re-upped with their labor force. I don't know, obviously. I do know that growth has been heady. As has been earnings for both companies. So a slight slowdown, and maybe that's all that this is expressing, is that a slight slowdown from the what I'll call breakneck pace, maybe that's a little generous, of the past year or so is to be expected.
Certainly what was so impressive is the profitability that these companies experienced. They were setting records in terms of profitability when cars were peaking at those 2022 or 2021 levels in terms of demand. They were able to sell fewer cars and often at higher margins. That was the recurring theme throughout the U.S. automotive industry. It seems like a little bit of a slowing, and Mark, to your point, a little bit of building in inventory here. So hopefully it seems like for consumers, perhaps it will be a period of time where they will be able to better negotiate for a better deal from some of these auto manufacturers out there.
Yeah, if you're timing this, you can look at inventory to sales, the Federal Reserve Economic Database. It's abbreviated FRED. You can Google that and then Google inventory to sales. You can watch it build and then time your purchase accordingly. A lot of us don't time car purchases that way. We buy when we need, but you can get a good sense for the end. The dealer will tell you this too, or you could just see it. Do they have a lot of cars on the lot or not?
Right.
Then again, many have these spillover lots today. You can't necessarily get a good sense for what's in inventory. So one way to do it is to look at statistics like this, which are pretty widely available.
The one last thing I'll note is there has been a little bit of a divergence between the commercial market versus the retail market. The retail share of cars being sold in the United States is down about 9 percentage points from 2021. A lot more growth in the commercial side of things. That's what we've been seeing. Another car story that making headlines today, Volkswagen is investing $1 billion into Rivian Automotive, the EV maker, and plans to spend up to $5 billion, Volkswagen, to invest into EV. And it really seems like, Mark, from a strategic perspective, Rivian has been operating, burning cash like it's going out of style. I believe I read that in Q1 they operated at a $1.5 billion loss, and they saw their cash reserves drop from $8 billion to $6 billion at that pace that they were at. They were going to be put in a really financially difficult situation, so they get an influx of cash from Volkswagen. The benefit to Volkswagen here is that they're able to utilize the software that Rivian has, because they were dealing with some issues internally at Volkswagen with their software program. So they're now going to be able to use Rivian's to develop their fleet of cars. It's amazing what Rivian was operating at. I couldn't even believe this. A gross loss of $39,000 for every vehicle sold in the first 3 months of the quarter.
So they haven't figured out how to make cars. Their stock price is down 90% in the past 3 years, but they've got great software apparently, and that's what this relationship is. It's probably going to turn into an acquisition, let's be honest.
Yep.
And that may be the destiny of a lot of these EV companies with very clever software, which is really the key. At some point, hardware is going to be a commodity, if it isn't already. And Tesla, this is not my area, because I think I'm just stating the obvious. But I for what it's worth, as a VW driver, I really like this.
Yeah, it seems like reasonable synergies between the two, where
that's a good word.
Rivian needs the cash, Volkswagen needs the enhancements on the software side of things, so it seems like a relatively good pairing here. In terms of the impact for Rivian too, they'll also be able to benefit from spreading out the cost of their software over a significant amount of vehicles. I mean, just given how much Volkswagen sells in terms of their cars on a yearly basis, they're really a behemoth in the market. And it also will allow Rivian to hopefully drop down the price on their vehicles, because the cheapest one out there goes for about $70,000. So it's a pretty steep cost there.
Were there going concerns about Rivian? You follow individual companies much more than I do. Are they viewed as a dead man walking in any sense? Or I don't mean to
if you look at this cash burn rate,
I'm looking at the share price.
Yeah, well, I mean, the share price is one thing. I mean, they just got swept up in all of the speculation of 2021, and their stock has been absolutely destroyed. Now, they did jump 30% yesterday on this news, but the rate at which they were burning 30% from down 90%, I know, I get it. It's drop in the bucket.
No, I'm just laughing at the reaction.
If you look at the cash burn that they were undergoing, something needed to happen here. They clearly realized it themselves. If you're burning through, $1.5 billion loss a quarter, it's not sustainable, and they just don't sell enough cars at a high enough margin to substantiate that. So clearly this was something that needed to be done. They were cutting headcount. They've already postponed developing out a factory in Georgia to try and cut some costs. So it comes at a really opportune time. Fisker, which is another EV company out there, had just filed for bankruptcy protection. So it's just been we know it, the auto manufacturing business is extremely costly. There's a ton of capital that is required. Margins are razor thin. So pairing up with someone like a company like Volkswagen, certainly you would see, hopefully would provide benefit to them, but time will tell if that partnership turns fruitful. Taking a look at markets, we're in relatively mixed territory here, with the Dow off about 120 points. The S&P 500's off about 7 points here. If we look at the U.S. 10-year Treasury, after some comments from the Fed speakers, U.S. 10-year Treasury yields are up about 7 basis points to 4.31% on the 10-year, and we've got oil hanging in here at around $81 a barrel. We're going to take a break here on the Financial Exchange, but when we come back, have your questions ready because we're going to be doing Ask Todd with Todd Lutsky from Cushing & Dolan and Wall Street Watch. That's right after this break.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, when would it make sense to use an irrevocable trust versus a revocable trust?
Yeah, so in this case, you really need to think about a couple of things. One, how much you're worth. Obviously, if you're worth, well over 4 or 5 million, 6 million, probably you're self-insured, so you're not so concerned about nursing home planning, and therefore the irrevocable Medicaid trust that we're talking about here might not be as applicable. But 4 million and under, folks are saying, and the other issue would be over age 60, let's say, and there's no rule of thumb, but 60, 65 is a great time to be thinking about protecting assets from the nursing home because it takes 5 years to do it. So if that's the case, then an irrevocable trust would make sense. And don't be put off by the word irrevocable, because you will find that the differences between revocable and irrevocable, at least these Medicaid trusts, is very, very few and far between. You're still very much in control. You live in your house. You enjoy your income. You manage your money. You buy and sell your property. It doesn't matter that it's irrevocable. So don't be afraid of it.
The estate planning experts at Cushing & Dolan have written a brand new guide that will answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after the NASDAQ and S&P 500 snapped their three-day losing streak on the heels of a slight rebound from NVIDIA, markets today are mostly quiet and in mixed territory. Right now, the Dow is down by 1/3%, S&P 500 is off by only 7 points, and the NASDAQ up nearly 1/4% or 36 points. Russell 2000 is off 1/3% as well. 10-year Treasury yield up by 7 basis points, now at 4.31%, and crude oil also up 1/3%, trading just above $81 a barrel. Shares in Southwest down by 1% after the airline slashed its second quarter revenue outlook as a result of a shift in booking behavior. Southwest now anticipates a decline of between 4 and 4.5% during the quarter, lower than its previous forecast. Meanwhile, FedEx popping by 14% after the shipping giant beat forecasts on the top and bottom lines for its fiscal fourth quarter. The company also reported a 16% drop in capital spending from 2023 with its latest cost-cutting efforts. Elsewhere, Rivian jumping by 30% after Volkswagen said late Tuesday it was investing up to $5 billion in the electric vehicle maker. According to Reuters, Bosch is reportedly weighing an offer for home appliance company Whirlpool, sending Whirlpool shares up by 13%, and General Mills posted mixed quarterly results, beating earnings estimates but falling just short of revenue forecast. That stock is down by 5%. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As we do every single Wednesday, we are joined by Todd Lutsky from Cushing & Dolan. If you listeners out there have any questions regarding your estate plan or Medicaid protection, irrevocable versus irrevocable trust, you can give our studio line a call at 888-205-2263. Again, that studio line number for any of your questions for Todd Lutsky from Cushing & Dolan is 888-205-2263. Todd, how are we doing today?
I'm never better, and you?
I'm doing great. The weather is fantastic. Summer is officially here. I'm going to kick us off with a question that I have for you. What are some of the considerations or traits that listeners should be thinking about out there if they're trying to determine what is better for them, a revocable trust or irrevocable? What are some of the typical characteristics that you would ask people to think about when preparing to go down either one of those roads?
Yeah, so this is, I always like to say this is the most frequently asked question I get probably in the estate planning world is, what's the difference? That's
right.
what in essence, what you're saying is, what's the difference? Why would I want one over the other? And is there, a problem with one versus another? A couple of just regular things to think about. I would say size of your estate matters. I mean, if you're self-insured for a nursing home, then you really don't need the irrevocable trust. If you have tons of long-term care insurance, you probably don't need the irrevocable trust. Younger people that have minor children that are probably in their 40s, 50s, they might not need an irrevocable trust yet. Doesn't mean we don't revisit our estate plan as we get older. I can't help but think of this client I met recently who did planning in 1998. One of them had died in 2021. The other one was 87, and they never revisited their documents. The kids came in, and so they never revisited them to change them, and they never funded them. So it was completely wasted. It was like, wow, what a disaster. Just happened the other week. So, I would say age matters, size of the estate matters, but, in general, I want people, the one thing I want them to take away from your question is, I think they have to learn. So if they've decided that they want an irrevocable trust, or if they've decided they don't want one because they think they're too restrictive, I want them to learn that that's not always the case. I think that the guide we're giving away is going to help them answer that question as to perhaps not so much how they're different, but how they're similar. Mm-hmm. These kinds of trusts, right? Now, remember, folks, I want to be very clear that there are many kinds of irrevocable trusts out there. There are kinds of trusts that sort of wealthier people who want to make assets go outside of their estate for estate tax purposes. In other words, a completed gift for gift tax purposes. Those trusts will likely be more restrictive than the irrevocable trust we're mentioning in this guide. This isn't the differences between revocable and all irrevocable trusts. This is the differences between revocable trusts and these Medicaid irrevocable trusts. These kind, you keep the control you want. Like, you can put your house in there and live there. You can pay your bills. You can sell your house. You can buy another house. These are all things that you can do today. These are all things that you can do with a revocable trusts. Even the income taxes are no different. You pay income taxes on assets in your revocable trust at your rate, your own personal rate. These Medicaid irrevocable trusts are also grantor trusts, which means they are taxed and at your personal rate. So even though you're filing an extra return, you're not paying extra taxes. So, folks, more similarities than differences in these trusts.
A lot to consider here. If you have any questions for Todd Lutsky here, you can give our studio line a call at 888-205-2263, whether it pertains to trust or anything in the estate planning world. Give our studio line a call. Again, that number is 888-205-2263. We're going to take a quick break here, but when we come back, we'll have your questions with Todd Lutsky from Cushie & Dolan right after this.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
The rules regarding inherited IRAs changed a few years back with the passing of the Secure Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zada from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
We are back in studio with Todd Lutsky from Cushing & Dolan. If you have any questions in the estate planning realm, whether it be regarding estate taxes, trusts, or beneficiary designations, anything of that nature, give our studio line a call at 888-205-2263. Again, 888-205-2263 for any of your questions in the estate planning realm for Todd Lutsky. Todd, we were talking before in the segment regarding irrevocable and revocable trust, and you had mentioned that there are several similarities between the two, but my question for you is on the irrevocable trust side of things, how does it offer protection for those people who are looking for it from the nursing home? I know you can get really into the weeds here, but just from a real 30,000-foot view, how does it provide that protection aspect?
So with an irrevocable trust, as much as you have a lot of control over it, there has to be language in it that says what you cannot do. Although it's very, very few things you cannot do. You can, like I say, live there, collect the income, you can manage the investments, but there's special language that says you cannot have direct access to the principal. So if you cannot get it, the nursing home cannot get it. Right. Now, I say that, but the nurse, it takes 5 years, so you got to make sure you set up the trust with that language in it, and then 5 years later, that's the protection you get. Now, of course, my saying that you can't get it directly doesn't mean you can't get it indirectly. And again, from a 30,000-foot view, that's what you have to go through and figure out how to do that. But, folks, I think the big thing here is, and what I want to really stress for you is that this situation is we allow you to get, this new guide, right, which is the differences between revocable and irrevocable trusts. We're getting close to the end of the month, but this is the most frequently asked questions. not only does it have in there how they work from an income and an estate tax question, it also has in there how they operate day to day, which is what you were driving at just a moment ago, Paul. It's going to help us figure out what the do's and don'ts are with the revocable and the irrevocable. So I think it will explain more similarities than differences. I think if you've not done your planning and you're trying to figure out which way is right for you, this is going to give you those answers. And I also think that if you've done your planning and are thinking now it's time to shift and maybe I need to learn more about irrevocable because I want to protect from the nursing home when I was younger, I didn't care, this guide will do it. Call and get it, 866-848-5699. or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
We're going to go to the phones here. We've got Brian on in Chelmsford. Brian, you're on with Todd Lutsky.
Hey, Todd, how you doing? Listen, I just had a question for you. I have a corporation I have to pay every year. Do you have to pay every year now having a trust?
So is your corporate, you mean you have like the $500 a year that you pay the state, that kind of thing?
Yeah,
Yeah,
400, right. You got to pay the minimum and all that, and then
Yeah,
you got to fill out a, the $125 thing for the, for the state. I forget what it's called, but anyway.
Yeah, no,
Just,
so that's a fair question, and I think I can answer it for you both on the revocable side and the irrevocable side. So these trusts are not recorded anywhere. So many people come in and say, well, I feel like so-and-so did a trust for me, but I think that they didn't do it right because it's not recorded anywhere. And doesn't it have to be recorded? And I think of recording, I think of fees, right? Whenever you record things in the state, you think of fees that you got to pay. So, and maybe that's what you're driving at here, Brian. So the answer is that these are not recorded anywhere, so they are not, there is no filing fee. There's no annual filing fee. So let's talk about other fees. Are there other expenses associated with it now that we know there's no annual filing fee? What about, a revocable trust? Does it have to file a separate income tax return? Well, no, it doesn't. It's revocable. Everything in the revocable trust is recorded under your Social Security number. So if you put your bank account in or your brokerage account in, you're going to list it under the name of the trust. So let's say it's the Lutsky Family Trust. It would be under my social. So the 1099s come to me. I simply file my 1040, just like I always do, and I report the income taxes right there. So I don't even need to pay the accountant to do a separate tax return if I can do it myself. What about the irrevocable trust? Again, not recorded, no annual fee whatsoever, no legal annual fee, that's for sure, at least on my part when I do it. But how are the taxes treated? Is that going to create us with any kind of an additional expense? Well, it's possible. If the irrevocable trust has just a house in it, just a vacation home, something in which we are not renting. So I'm driving at the fact that it has no income. And that's not uncommon, folks. Generally, people put their home and their vacation home in. They're their biggest assets, and they want to protect them. So if that's all that's in this Medicaid irrevocable trust, then there is no ID number that I would obtain for the trust. There's no reason for the IRS to know that you have this trust because there is no income. So if there is no income, then there's no need to file. So I don't even have a separate bill to pay the accountant to file the 1041 income tax return for the trust. However, as many of you know, that's not all we put in these trusts. A lot of our clients say, we want to protect our investment portfolio as well. So let's retitle the, $500,000 investment portfolio to the trust as well. Well, that's going to generate interest and dividends. And by the way, in order for me to put it into the irrevocable trust, we would need to get you a tax ID number. So now the IRS knows that you have this trust. That's the Social Security number for the irrevocable trust. So it's going to be expecting a tax return. And if it generates, I believe it's some small number, more than $100 or more than $300 in income, you need to file. You need to file. However, we create these trusts as grantor trusts for income tax purposes. So while you need to file, and the form you file is a Form 1041, a little different than our 1040, but very similar. You got to file the 1041, the interest, the dividends, the capital gains that are generated from that 1099 that's going to come out from the investment portfolio to the name of the trust will be picked up on the trust. However, this trust pays no tax. Now, don't get too excited about that because it doesn't pay the tax, but it kicks out a K-1 form, or what they call a grantor letter, that generates to you, the donor, telling you here's what was earned by this trust. Interest, dividends, gains. Yes, it retains its same character to you, and you pick it up on your personal 1040. Why that's important is because you are still paying the same income tax that you were paying as a revocable trust holder. You don't pay any more or any less. You pay the same. Again, more similarities than differences with these trust folks. And lastly, the only additional cost would be, you might have to have an accountant prepare that tax return. So we'll see. But I think part of this point is, folks, that these differences, that there are probably more similarities than differences between these revocable and irrevocable trusts.
A lot of great information that we went over today, Todd. Thanks so much for your time today. We really appreciate it.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today, 866-848-5699. That's 866-848-5699. Or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The economy has been in a really good place over the course of the last 6 to 12 months. If you are to study GDP, look at the stock market performance, look at the unemployment levels that we are at, where we're sitting at 50-year lows. However, there continues to be this rhetoric out there that when polling is done, many Americans feel very differently from what the economic data points to, where much more Americans are pessimistic on the state of the economy. That's all the time that we have here for the first hour, but in the second hour of the show, we're going to be going over the economy and where it stands today and how Americans feel about it. That and much, much more here on the second hour of the Financial Exchange right after this break.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com armstrongadvisor.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month titled The Complexities of Inherited IRAs. Mike, with how the inherited IRA picture has changed in the last few years, one of the things that a lot of people need to consider is how to minimize taxation, not just across their own lifetime, but on a multi-generational basis once they're gone.
Yeah, and quite frankly, prior to these changes, IRAs were often used, especially Roth IRAs, as a kind of multi-generational inheritance plan. And these new rules have completely changed that, like I said, for most beneficiaries of retirement accounts. And so a lot of the planning that was done prior to 2020, if not haven't been looked at again, just might run contrary to your entire thoughts of what you did before these changes.
It seems to me that it makes sense now you've got to consider the tax situation, age, and other characteristics of your beneficiaries who might not be spouses when figuring out who to name on your IRAs.
Yeah, not only that, and a lot of that stuff was considered prior to, but maybe you've got two kids with vastly different income situations. Do you consider naming one the traditional versus the other the Roth beneficiary in order to minimize total taxation across generations? These are complicated issues that I know it might sound like just applies to a small subset of Americans, but most people these days have a retirement account.
Our guide this month, again, it's titled The Complexities of Inherited IRAs, and the two ways to request it are by phone or online. Website is armstrongadvisory.com, or you can call 800-393-4001. That website, again, is armstrongadvisory.com, or the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699 Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to the second hour of the Financial Exchange. Paul Lane, Marc Fandetti, and Tucker Silva here with you. Markets are in pretty mixed territories. Not a whole lot of volatility today, with the S&P 500 off about 7 points and the Dow Jones off about 65 points. NVIDIA has been in the headlines a lot this week. It's been trading up and down. Stock today down about 2%. We are seeing the U.S. 10-year Treasury increasing upwards to 4.3% from where it sat previously around 4.25%. And FedEx is also rallying significantly on a strong earnings report. Looking ahead for the rest of the week, we will be monitoring the core PCE data that will come out this Friday, the Fed's preferred measure of inflation. And outside of that, it is just earnings and the core PCE data that we'll really be focused on. But we kick off the second hour of the show with a more bigger picture topic, the state of the U.S. economy and the massive split, it seems like, in terms of how people and the U.S. citizens feel the economy is doing versus the hard economic data that Marc and I and many talk about so frequently here. There was some polling done in particular by The Guardian. They did a Harris poll a couple weeks back, and the results from that, I almost couldn't even believe that they were true. Some of the results that they found from this poll, 49% of Americans thought that unemployment in the U.S. was at a 50-year high. It has been at a 50-year low. Now it's come out of that low, but it was closer to a 50-year low rather than a 50-year high. 56% of those respondents marked that the U.S. was in a recession. It is not in a recession. GDP has been growing at a really steady clip. And then 49% of those participants felt that the S&P 500 was down for the year, and it is up, upwards of 15% year to date through the first 6 months of the year. And it comes back to what we always talk about, Marc, with this subject. If you have inflation, consumer sentiment, it seems like I was just looking back at the University of Michigan that tracks consumer sentiment historically over the last 50 years. If you see the significant low points for consumer sentiment, 2008 was one. You had, the late 70s, another period of time, and 2022 was another. All periods of time, excluding 2008, with inflation being, a common factor there.
I'm not sure I draw the same conclusions from that Harris poll that is consistent with the general interpretation. I think it's unfair to ask people about specific economic statistics. I don't know what rainfall has been on average year to date. I experience it every day.
Yep.
My sense is it's been wetter this year than past years. It could actually be, there could have actually been less rainfall. I honestly don't know. So I think it's unfair to use specific terms like recession, which people may think, ooh, that's got a technical meaning, and they may think it's sort of a trick question. I also think it's unfair to ask them about specific levels of the unemployment rate. I don't know exactly how many games the Red Sox have won this year. I don't follow Major League Baseball. My sense is they're a bit of a disappointment, but I couldn't tell you how many above or below 500.
Sure.
How many games?
It's a great way to put it.
6. I think it's unfair. Thank you, Tucker Silva.
You're welcome.
But my point is, I had no clue. I just have I have a sense for the general sentiment. And the general sentiment is prices went up by a lot in the post-COVID era. They started rising under Donald Trump. Point in fact is not entirely Biden's fault. He shoved a lot of stimulus. Trump did into the economy too. Not surprising. Supply was constrained. You've got two presidents throwing trillions into people's pockets. Inflation's going to go up. It has since come back down. Maybe the Fed had something to do with it. Maybe that was luck with supply chains normalizing and stuff like that. But it happened on Joe Biden's watch. He's going to be held accountable, just like it happened on Jimmy Carter's watch. The big surge in the late 70s, he was held accountable, even though he didn't start the fire, so to speak.
Sure.
So I understand why people are upset. Prices are up by 20% in the past 4 years on average. Some are up by a lot more, some are up by a little less. My real spending or average spending is up 1.2% in inflation-adjusted terms over the past, over 10% over the past 4 years in inflation-adjusted terms. I'm spending 10% more in real terms. That's on top of inflation, but average hourly earnings are only up 1.2%. That's Exhibit B. Exhibit A is prices are up 20%. I'm upset at that. Mm-hmm. Whether it's at the McDonald's drive-thru where my McChicken now costs 70% more than it used to, in the supermarket, you name it, prices seem like they're out of control. They haven't come back down, and by the way, they won't. And Exhibit B to me is real wages have barely budged. This is why people are upset, whether or not it's Joe Biden's fault, and I would argue that it's not entirely his fault. His predecessor also shoved a lot of stimulus into a supply-constrained economy. He takes the blame, and the results are in these polls, and they're in electoral polls as well.
Yeah, it has been surprising. All those, I thought you really laid that out nicely, particularly with it's about what you follow, right? And we are in a bubble where we follow this stuff really consistently and talk about it on a daily basis. But rainfall, I'm not a meteorologist, so I don't follow those types of things.
I have a general sense, Paul, but it's not a fair, especially from economically illiterate, frankly, journalists who barely get the story straight most of the time. I mean, don't start lecturing average people about how they should feel when you barely have a command of basic math. No disrespect, and I'm a convert. I struggled with math right up until I had to learn it in college to get economics down. So I sympathize with the average American who gets intimidated by a little bit of division, never mind a little bit of, algebra that you have to use to compute inflation-adjusted comparisons over time. But I don't take away the same conclusion that the journalists who are reporting this story do. I think that questions are unfair. I think people are perfectly capable of gauging their economic well-being. I really do.
Yeah, inflation will continue to be the topic that we'll focus on for the next 6 months and will be heavily discussed heading into the election cycle there. Fairly or not fairly, it's something that irritates a lot of people. And
it's
both
totally
understand
fair,
that.
isn't it, when it's a policy failure and the Fed decided to accommodate, somewhat of a technical term, but you get it. It makes sense. It's intuitive. Accommodate the supply shocks of 2020, 2021 by not stepping on the brakes because they didn't want to cause a recession. And as a result, inflation ran up out of control somewhat for a couple of years. It's since come back down, but it's still not at the level where we can ignore it. And people are understandably looking to point the finger. Somebody mismanaged that process. Partly the Fed, partly two presidents, but the guy under whom it happened, the bulk of it happened, is going to take the blame, and that's just the way it goes.
Another focus that ties into inflation, and Marc had mentioned the trillions of dollars of stimulus that came from the COVID era, is going to be heading into the election cycle and perhaps the debate on Thursday, the U.S. fiscal budget, which is running at close to a $2 trillion deficit. And there was a piece earlier that I looked at from Bloomberg just regarding its impact on Treasury rates. We've seen an inverted yield curve for a substantial period of time. Geez, it's got to be close to 2 years now, I would say at least 18 months
it's
plus.
almost exactly 2 years.
That we've been at this level where the amount that you can get from an interest perspective on a 2-year Treasury had exceeded what you could get on a U.S. 10-year Treasury. And it is something that I think about far too often, just the deficits that we're running at, the amount of U.S. Treasury debt that is out there, which was, I read this morning, $27 trillion of just U.S. Treasury debt. At some point in time, there is going to need to be a solution. I don't think that we're going to find it here this upcoming election cycle, or there will be any real significant action when you're looking at the fiscal budget. But I continue to think about it probably far too often, Marc, when I scrutinize sort of where
you
stand.
should. I mean, you're going to be paying taxes for decades. Me too, but my time frame's a little bit shorter than yours. So these chickens will come home to roost in the form of higher future taxes or inflation, because you can inflate. You could do a few things with debt. You can pay it down by raising taxes. Nobody wants that.
No.
You can inflate it away. We did a little bit of that. In 2021, when at one point, or 2022, mid-2022, when inflation was almost 10%, I'm rounding up a little bit year over year, that's 10% right off the federal budget deficit if you're doing a debt and deficit accounting properly. So one way to get rid of debt is just to inflate it away. And we all experience that. We know we love paying back fixed rate mortgages with inflation, non-inflation adjusted dollars. If your mortgage was 3% when inflation was running at 9%, you're making money, in a sense, hand over fist. That was a really good deal. So there are only really a few ways to get rid of debt. The third way is to grow your way out of it. That requires heroic assumptions, though, about growth, and that's where the concern comes in. We're not growing fast enough to allow debt to shrink as a percentage of gross domestic, or the deficit as a percentage of gross domestic product. And at some point, it crowds out not only other government spending. We all know we're spending more on interest now than we are on defense.
Right.
In this world, Russia's invading everybody, and we got interest crowding out defense potentially. That's nuts. So this is where we are, and nobody has a plan to do anything about it. Trump has said, I won't touch anything that makes anybody upset, as he panders endlessly to win votes, and Biden just seems generally sort of clueless about fiscal responsibility.
We're going to take a quick break here on the Financial Exchange, but when we come back, we're going to be talking about the housing sector and sort of where it sits at the moment, as well as discussing American brands and their fear over China. That's right after this break here on the Financial Exchange.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts. With with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood, void where prohibited. Dine in only. Continuing our state capital trivia today, this Midwest state capital almost had the best city name in the entire country, Fort Raccoon. The original residents of the city nearly named their newly formed city after the local Raccoon River. Instead, they chose a French phrase that means of the monks. Trivia question today. Which Midwest state capital was almost named Fort Raccoon? Once again, which Midwest state capital was almost named Fort Raccoon? Be the 7th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 7th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
The housing market has been in a slump as we've seen 3 consecutive months of sales of existing homes in the United States declining. We also saw some data come out earlier this week where housing starts and building permits had dropped to levels lower than anticipated by economists out there. The housing starts had dropped about 5.5%, and then we have home builder confidence at its lower levels since about December of this year. You know, a lot of the discussion here is interest rates and how that ties into the slowdown in economic activity on the housing front. That's what they're intended to do when the Fed is raising rates. They're increasing borrowing costs, and as such, they're trying to slow down activity from a borrowing perspective. That applies to home building. That applies to, you know, capital expansion or factory expansion on businesses, hiring, all those types of things. Right now on the U.S. 30-year fixed mortgage, we sit at about 6.87%. Now, there's arguments being made out there that perhaps if we were to see several rate cuts over the course of the remainder of the year, that could make the borrowing side on mortgages more affordable for people out there. But ultimately, and Marc just threw his hands up in the air.
Oh yeah,
and you kind of jumped my
what a brilliant insight,
your reaction.
Wall Street Journal,
your reaction.
Bloomberg. Thanks.
All of them are mentioning out there, and I have the same reaction as you. Is first of all, I question certainly dropping down interest rates makes more buyers available in the market, but I still question. Ultimately, it comes back to the same thing that we always talk about, the supply side. And the supply side is not going to be fixed anytime soon. That's going to
Well, my reaction was to the idea that, if the Fed just starts cutting interest rates and rapidly in panic mode, this will be good for housing. If they do that, it's because the economy is sliding into a slowdown, charitably, or worse, a recession. The Fed is not going to cut rates aggressively just because they think the neutral rate, this theoretical rate that they're trying to get at that balances potential GDP growth with stable inflation. They're not going to lower rates aggressively just because they think that so-called neutral rate has fallen.
And here's the other thing.
They're going to do it because they think the economy's in trouble, which is not good for housing.
Here's the other thing. If they were to pull the trigger too quickly and cut rates, that would be a bigger problem that would lead to people complaining about what we just talked about in the segment before, which is more inflation activity. If you are to see...
It should, yeah.
If you are to see them do it in the wrong time and they're to lower interest rates and it surges the amount of housing activity, while it would be good for the economy in terms of economic activity, it could also lead to further pricing pressure.
Depends on your view of inflation. It's like we talked about in the last hour. You need to know somebody's framework for thinking about inflation. What drives it? In this explanation should be consistent. It should explain the inflation we experienced from 2021 to roughly 23, mid-2023. It should also explain the disinflation, the reduction in the rate, not in prices, as we all know, but the reduction in the rate of inflation that we've experienced since mid-2023. Whatever framework you have should be able to explain both the climb up the mountain and the climb down the mountain. I would love to hear more from Fed officials when they give their opinion off the cuff, what model or framework they're applying. It would help us to set expectations, which is, after all, the whole purpose of the Fed officials speaking to the public.
Just a couple more tidbits here on housing. We did see the median home price throughout the United States increase to about 6% from where it was last year, so continue to see upward pricing pressure there.
Yeah, how can you say housing's in it? Not you, but how can journalists write about housing being in a slump when prices are increasing at a rate, albeit off of a little bit of I'll call it a lull. It's not like they actually, they may have contracted somewhat according to Case-Shiller year over year at one point last year, but that was very brief. It was a blip. A 6% plus year over year increase, according to the Case-Shiller National Home Price Index, is epic in historical terms. So I have a hard time. I guess I don't have a hard time squaring that with housing market fundamentals. We know it's just a matter of, on the margin, there being very few transactions.
American brands are concerned about China, and as a result, what we've seen here, one of the biggest takeaways from the pandemic and all of these supply chain shocks that we saw, plus the geopolitical issues that have arisen with trade tensions between the U.S. and China and other countries out there, is that many companies are looking at alternatives in terms of where they manufacture their products, shifting away from their dependence on Chinese factories. And a lot of that is supposed to be flowing into India. At the moment, is recent readings, 13% of India's economy was tied to manufacturing, but there's been a significant push to try and make it more of a priority in their economy. We've talked about a lot on the show, Apple manufacturing some of their iPhones there. But to be clear, the infrastructure in India has a long way to go to get anywhere near as efficient as where China stands from a manufacturing standpoint. So this is something that's going to have to evolve over a much longer period of time as these companies reposition to not be so reliant upon one country out there.
Yeah, really tough if you're making decisions about this. Both presidential candidates want to decouple Trump more aggressively than Biden from China. So the writing might be on the wall. We might be looking at a serious constriction of trade with China. God forbid we go to war with them. Even a limited conflict will result, I assume, in the reduction of trade to a trickle. How the heck do you plan for that?
Really difficult. There's been a lot of retaliatory moves back and forth between the two countries in terms of tariffs from U.S. and China, but we'll see how that story continues to play out.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the differences between revocable and irrevocable trusts. Todd, is there a difference in the taxation of a revocable trust versus an irrevocable trust, and any difference in how you would file your income taxes?
So surprisingly, a lot of you might say, well, yeah, there should be a difference. And there is, but there really isn't. So let me explain. With a revocable trust, everything that you've put in it is going to be titled under your Social Security number, like bank accounts and brokerage accounts, etc. Whereas items that you put into an irrevocable trust, like bank accounts and brokerage accounts or rental properties, those accounts would be set up under a tax ID number for the trust. So the trust now does need to file its own tax return. It's called a Form 1041. However, these Medicaid trusts are designed by us to make them grantor trusts for income tax purposes, which means you are the owner for income tax purposes, and all the income and gain gets reported on your personal return. So while you're filing a separate return for the irrevocable trust, you're paying exactly the same tax at your own rate, just like you did before the trust and just like you would with a revocable trust.
Well, the estate planning experts at Cushing & Dolan have written a brand new guide that will help you answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, will help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right, trivia question today was which Midwest state capital was almost named Fort Raccoon? That would be Des Moines, Iowa. Des Moines traces its origins to May 1843 when Captain James Allen supervised the construction of a fort on the site where the Des Moines and Raccoon Rivers merge. Allen wanted to use the name Fort Raccoon. However, the U.S. War Department preferred Fort Des Moines. Brandon from Tilton, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt, and is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. And join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
We talked about this a little bit on yesterday's show. There was a report that came out from Vanguard regarding its 401k department metrics. It handles a lot of plans for companies out there. And the positive note regarding this report on 401ks for about 5 million U.S. workers that Vanguard covers is that they saw a savings rate of 11.7% from a contribution perspective. That's a combination between what you, the employee, put in and what your employer puts in. That is on pace to reach a record high here. So that certainly is encouraging news that people are saving a considerable amount into their 401k. On the more negative side of things, Hardship's withdrawals rose in 2023 to about 3.6% of participants. That was up from where it was in 2022 at about 2.8%. And that is typically an indication of those people who are going through difficult times. That's why you'd apply for a hardship withdrawal, whether it be foreclosure, eviction, those types of things.
It could be first-time home purchase too, right? Could be uninsured medical expenses, which is not great. But there are good reasons to take a hardship. They still, one of the safe harbor, as the IRS likes to call these things that you don't get penalized for, is, I believe, first-time purchase of a primary residence.
I know that
how much of it is that.
But does that go into, is that categorized as hardship?
I think it's one of the...
I thought it was its own carve-out.
No, I think it's one of the examples of an immediate and heavy financial need. Purchase of a principal, first time. I don't know how you document that, and it's the record keeper like Vanguard. It's their responsibility to keep that documentation. I don't know exactly how they do that, but, well, I know how they do it. I just don't know how they actually verify it. Anyway, so it could be for good reasons, too. It doesn't sound like Vanguard thinks that it is. It's
Sure.
not. Immediate and heavy financial need sounds dire, but there are education, higher ed expenses, I believe, are another safe harbor category. So you could pay for somebody's tuition, an immediate family member. Again, I'm not saying it's that these people are in great financial shape. Otherwise, they probably would have other savings. But it's not necessarily a signal of people struggling.
And to be fair, they do need to dive further into the data that they've indicated as such, that Vanguard has stated, that they really have to sort of determine, what is it overall financial conditions and the inflation that we talk about, or is it just that lower compensated workers actually have access to these funds and they're going to tap into it, and that's what they're doing it for, whether it's for something like a home purchase, which affordability is at a significant low. So maybe it's that, Mark, to your point. The other positive point that I found here in this report is the automatic enrollment feature is becoming more and more prevalent. 59% of plans have automatic enrollment as of 2023. That was up from 34% in 2013. To me, the earlier you can start, the better. And if someone is just automatically enrolled, that's a good start in terms of retirement savings.
Yeah, I can't believe part of me says I can't believe it's only 59% because the Pension Protection Act of 2006, nearly 20 years ago, made this a no-brainer. But we can talk about why on the other side.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean, world-class cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com, learn about all 3 islands, and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mark, close out that point that you were making.
I was thinking 60% sounds low, but then there are companies that employ a lot of seasonal people. You wouldn't want to enroll somebody for 3 months.
Heck no.
Only to have them maybe never come back. That's administratively burdensome and costly, and those costs are imposed on all the other participants in the plan.
Right.
So we may be at maximum adoption, not that people are losing sleep over this or anybody even other than people in the industry follows this, but we may have reached maximum adoption of the so-called auto enrollment feature at, I guess, 60% if Vanguard's sample can be generalized from it. It's just Vanguard. There are a lot of other big record keepers
Fidelity's
out there.
huge, too.
Fidelity, T. Rowe, Vanguard have like 75% of the industry. And then there are some nice local firms like The Standard you may be familiar with, Newport Group, Securian, and others who do 401k record keeping in the New England area as well. So that's not necessarily generalizable.
There also are some that are nightmares out there, but I won't name them by name to deal with from a 401k record.
So what do you tell people? Look, call ahead, get the process down. There might be a form. They might require what the heck's it called? A medallion?
Yes.
Have
medallion
you ever,
signature guarantee stamp.
This is only in finance,
Oh,
right?
yeah.
It's not a notary, which is a big enough pain.
Yeah.
A medallion, what is it, a signature guarantee? What the heck's it called?
It's called a medallion signature guarantee stamp, and we're going down a rabbit hole that
No,
probably
but I'm
no one
bringing it
cares
up as an
about,
example. Like if you're thinking, hey, I'm retiring here, then I'm just going to clean out my 401k. You might not be able to get the money in a week or a month. There might be a process. Would you tell a client, call ahead? Get the process down, because everybody's is a little bit different.
Yeah, you have to see if it makes sense for you, whether to keep the plan as is in the 401k or roll it out. But yeah, you should get into the process because some carriers make it a lot more difficult than others. The big guys, for an efficiency standpoint, like a Fidelity or Vanguard, often make it a lot easier than some of these other ones out there. That medallion is like the ultimate screw you metric out there just to make administrative paperwork such a hassle. It's so hard. It's so challenging to get it. Banks really push back on issuing it now, and it's nowhere near as prevalent as notaries are. It's just when you're doing what we do and you hear that name come up, then you know you're in for a bit of a runaround and a bit of trouble there. TSA has broken the record for the most people screened on a single day. As of Sunday of this past week, the TSA administration screened 2,996,495 people on Sunday, and they're anticipating eclipsing that $3 million metric this upcoming Friday. It has really been a significantly robust travel season as we've kicked off the summer season here, and to their credit, I haven't heard any real significant outcries of any issues. I'm sure it can vary airport to airport, but it seems like they've been able to process this traffic relatively reasonably. Conversely, you have airlines in general, though, struggling. Many of them, Southwest came out with some revenue numbers today that were underwhelming, and it probably circles back a lot to the issues that Boeing has been having from a manufacturing standpoint. But people are getting out there, and they're traveling big time for the summer.
Yeah, more evidence that the economy, on average, and I know this isn't consistent. I feel the need to preface every statement about the economy being strong statistically with, I know it's not consistent necessarily with your lived experience.
Yep.
But on average, spending is growing strongly. Wages aren't necessarily keeping up, particularly after inflation. But on average, spending's growing strongly. Thus, the economy is growing strongly in a statistical sense. It's going to be hard to squeeze more out of this economy than we're squeezing out of it right now. I talk to investment managers, for example, who say, oh boy, next administration, if they just deregulate and cut taxes, we're really going to get this economy going. To which I respond, so you think it can grow at more than 3% year over year, which we've been doing past several quarters? You think it's going to grow at a higher rate than that? That would be heroic.
It's hard to point to what that catalyst would be because, to your point, leisure and hospitality spending on the services side of things has been really resilient, and this is evidence of it.
That's the ultimate example of discretionary spending.
It really
is.
is.
That's the first thing you cut when
the Europe trip,
encountering
the
hard
family
times.
vacation. It's the easiest thing to trim off and save yourself a pretty significant clip of money. And all of the data out here, whether it's just this TSA anecdotal piece or the other data that we look at, points to a lot of resiliency on that front. Now, on the durable goods side, we've seen that wane off significantly, but not on the service and hospitality side of things. That still has been really resilient. We're going to take a break here on the Financial Exchange. When we come back, we'll be doing a little bit of stack roulette right after this break.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
The rules regarding inherited IRAs changed a few years back with the passing of the Secure Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zada from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration is now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
All right, time for a little bit of Stack Roulette. I will kick us off. There was a study done. It was the Gauge report that was released by Nielsen that indicated YouTube made up 10% of all viewership on TVs in the U.S. in the month of May. Netflix was second in 7.6% of viewership on the streaming side of things. And I point this out because I've talked about this on the show before, and Tucker, you and I are probably in the same camp on this. My kids only watch YouTube through our TV, through their smart TV, the app, but they have never watched traditional network television. And it's something that I do feel is a pretty consistent trend among younger people out there.
Yeah, especially younger families. I mean, in my household, it's YouTube, Amazon Prime, and Disney Plus.
Right.
That's it.
And that's what the concern has to be for a lot of these broadcast networks out there is, are you going to be able to keep up? And the cord cutting thing has been played out over and over again. Everyone knows the numbers on that, you know, traditional cable is declining, and all these streaming services, to be clear, there's been some that have been successful, Netflix being the biggest one, but there's a lot that have really struggled to break out their content library and make it so that it's something that's appointment television. But the streaming side of things for YouTube and Netflix, certainly encouraging results here and concerning if you are in the other camp.
What do you guys watch on Amazon Prime? What are you watching these days? I know we don't give entertainment advice, but
The Boys just started back up.
Oh, yeah,
that's a popular one.
That's great.
Season
that's
4
a lot
just
of fun.
started.
Not appropriate for the kids, but it's
not at all.
Unless you want them to grow up with serious.
No, it's
problems.
extremely graphic.
I'm the worst person to ask. Our TV show cabinet is really empty at this point. However, I have heard that Apple TV has a bunch of different shows that are quite good. So we're considering getting an Apple TV or getting access to an Apple TV membership. We just do not currently have it. I got rid of my HBO Max. That was the big move that I made.
Do you cycle in and out of these services?
I don't.
Pick up some stuff.
I really need to be more diligent in looking, scrutinizing.
You need to be more tactical.
Yeah, tactical about my subscriptions.
Put it in investment management terms.
Exactly.
That I'm comfortable with.
I'm probably going to resubscribe to Hulu, actually. The Bear starts tonight, so that's a popular one. But that's the only one I watch on Hulu.
How many subscriptions do you have, Mark, for you?
Well, I have access to a few through mooching.
Right.
Prime, of course. And I'm in and out of HBO Max when they release a series that I thought was interesting.
It's kind of where I've landed on it.
I upped it for a month to watch Dune.
Yep.
And I picked up a couple of other series that I had lost track of. It's very, it's high quality. They're a great studio.
They do.
Prime is, you get what you pay for. I can't get into most things on Prime.
But you don't have the Prime membership?
No, I do.
Okay.
You get it automatically, right?
Yeah.
Prime TV.
Right.
Yeah.
Right. Okay. I thought
it's just they throw a lot of crap out there, as does a la Netflix. It
used
to be a similar
to me.
Throw a lot of stuff at the wall.
I've only watched Prime for the Thursday night football games, and that's about it. I couldn't tell you another show on there, but again, I might not be the target demographic there.
I think you are. I think we all are for probably sports programming.
What do you got?
That. Speaking of target demographic, Wall Street Journal asks, "You want to bet on the CPI or the jobs?"
I thought
report?
you might pick this one.
Hell yeah, I do. No, not really personally, but it's interesting. What they call a prediction market is coming to an institution called Interactive Brokers. I'll just call them an online trading platform, even though they do lots of different things. So you will be able to bet on U.S. economic data. Over-under type bets. Do you think CPI will come in above consensus, below consensus? Do you think GDP will be hotter than last quarter, cooler than last quarter? That kind of stuff. As if we needed another way to poll the wisdom of crowds, and maybe we do. Maybe the consensus, which is the consensus of investment professionals, not a wider audience. Maybe it will help. I don't know. Maybe it will help to inform expectations for broader groups. Of course, people who go online to make bets, they're self-selecting. By that, I mean they think they're better informed than average, so they want to go online and bet. I don't know if the results are generalizable, but we're going to watch this with great interest. It'll be another source we can quote to you for expectations as to whether the Fed's going to cut or not, inflation will go up or not. It'll be an interesting little experiment.
Yeah, we'll have to put it to the back of our We'll have to monitor those predictions, I guess, for a little bit to see whether or not it's even worth us bringing up and mentioning. But it does further this idea that the U.S. has really shifted where you can bet on pretty much anything now. I mean, we've talked about on the show previously, DraftKings, FanDuel, and then just the legalization on a statewide basis, not all states, but state by state, more approving or legalizing gambling after many years it not being legal. Now it just seems like the whole market is being opened up from a betting perspective. Now you can even tie it into your favorite economic reports on a monthly basis. Waymo has dumped its wait list and opened up its robo-taxi service in San Francisco for everyone. Waymo is a self-driving car unit out of Google and Alphabet, where they've been for years trying to get their self-driving technology on the roads. San Francisco is the area where they've tested it most frequently. They had a wait list of 300,000 people to download their app and be able to procure robo-taxis. And my question to you both is, would you be one of the 300,000 people on the wait list looking to secure a robo-taxi?
I'd try it out for a mile commute or something just to see how it is, maybe 2 miles. And
that's probably a good way to
dip
approach
my toes in the water, if you will.
See how it goes. I would, whenever
I wouldn't even know how to call it up, though.
I think it's just on the app. There's like an Uber or
just an Uber, or do you have to get a Waymo app?
No, you have to get a Waymo app, but
okay.
it would just be like you plugging in your coordinates into an Uber, saying I want to go from here to there.
One more thing I got to download. Great.
Yeah, I know. I am pretty stingy on apps and downloads. But what about you, Mark?
I'd want to see you take it first.
I was going to go down that direction.
I'd load you up in one.
Maybe
send it around Needham here.
Me personally.
And if you come back.
Yeah, go down the street, get lunch, come back, see if you come back alive.
I tend to like to be on the back half. If there's a new version of something coming out, I want to wait for the second or third version to kind of fix out all the bugs, and I land in the same camp here. I'll stick with Ubers and Lyfts for now and wait for others to be the feedback loop.
Somebody's going to hack one of these and send some poor sucker off a bridge. I hate to say it, but it's only a matter of time before Russia starts sending our Johnny cabs from Total Recall. That's a reference for Ben Kitchen if he's listening.
Oh, that's a good one, actually.
Isn't it?
I even got that one.
Huh. What an uplifting way to wrap our program. That's all the time.
Paul plummeting off.
That's all the time that we have for
Johnny
this
cab.
episode of the Financial Exchange. But we'll be back with you tomorrow morning at 10 a.m. Have a great rest of the day, everyone.